Regarding implementation, as you know that recently SECP has made some rules and regulations for disclosure formats for the financial statements, and some of the life insurance companies are going to adopt very recently in the first quarter of March. Right. So how we are going to report to the board that the life insurance companies are going to change their format, and then again they're going to after 3 years they have to change the format to IFRS 17. So is there any guidance for that?
There are no guidelines for it, because that's something that voluntarily as a management of the company, you, as I said, you should start doing that. But I can give you example of my company. In our organization, in the board meeting, we did inform the board of the potential impact of IFRS 17, starting from the point of what IFRS 17 is, how does it change. This is the format under IFRS 4, this is the format under IFRS 17. So I think it all depends on how you want to go ahead with talking to the board. At least if you start the conversation now, of course they should know that a significant change is going to come in 3 years' time. And then it depends on you. Do you really go deep into the details, or just you might just want to make them aware of what's happening and maybe take it as a gradual process. Have a conversation now, and then maybe have a conversation 6 months' time. Maybe keep them up to date in terms of what you are doing within your own entity in terms of implementation, so that it doesn't come as a surprise to them. They should be aware of the possible implications, and you can even preempt the kind of questions the board would want to know, and the shareholders, the majority shareholder would want to know that what impact will it have on their dividends, let's say, or the potential dividends. So I think those are the kind of questions you need to address, keeping in view the target audience. But there's no guideline as such, but these are the few points you could keep in mind if you're talking to the. Okay, if there are no more questions, then thank you very much. Thank you.
Thank you, Ali Bhai, for this effective presentation. Moving forward, we have our next presenter, Ms. Hina Sadiq. Ms. Hina Sadiq will share her thoughts on the audit aspect of IFRS 17. Ms. Hina is a qualified chartered accountant and is associated with Deloitte Yusuf Adil. She is an active member of Accounting Standard Committee and Chartered Accountants Women Committee at ICAP. She is also a member of Evaluation Committee of Best Corporate Reports Award of ICAP and ICMAP. Please put your hands together for Ms. Hina Sadiq.
Assalamu alaikum, and a very good afternoon to all present here. I'm always told that this is a very difficult time in a seminar, a post-lunch presentation. I hope that it will not put you to sleep, because that's what I discovered when I was trying to research for this presentation. It talks about auditing in the world of IFRS 17. When I went to Google, there was nothing. I'm a member of Deloitte. I went to their website. There was nothing. I went to all the other Big Four websites. There was nothing. So apparently everyone is sleeping in the Big Four also, just like my audience is asleep. So what I'll do is I'll be bringing actually another stakeholder on board, because since morning all we've been saying is कि ये बदल जाएगा, इंश्योरेंस इंडस्ट्री के लिए ये बदल जाएगा, हम ऑडिटर्स की दुनिया भी बदलने वाली है under IFRS 17. Probably a lot more than we realize. But 2021 is not that far away. So I would want to. Yeah. Yes, we all agree that IFRS 17 is the single most significant change that's going to hit the insurance industry in the past 2 decades. It involves a lot of change, a change in processes, a change in personnel, a change in mindset, a change in the way we look at our profits. All that is going to change. And yes, the content and the structure, but a lot of it is also going to emanate into the financial reporting systems, the things that are of most importance to us. In the current scenario, this is what our P&L looks like. There is a gross premium, there are fees and commission, then there's a net investment income, their claims, acquisition costs, etc., etc. What we understand is that all these things in a traditional method of accounting are verifiable from underlying documents. For your gross written premium, you have your contract, your insurance contract. वहाँ से आपको terms of contract मिल जाते हैं, rate मिल जाता है, cash values मिल जाती हैं. You have your payment vouchers which tell you that the gross premium has been paid or not paid. Contribution register होते हैं आपके पास which tell you the new business that has been underwritten during the year. Net investment income के लिए आपको एक investment portfolio पकड़ा दिया जाता है, उसको आप CDC से match कर लेते हैं, आप various bank accounts से match कर लेते हैं. There's a movement in the market value which is again very easily verifiable. All this, ये जो इतना सारा लिखा हुआ है, it basically gives us auditors comfort कि there is some underlying document जिसमें ये सब data available है और हम उस document को उठाएंगे, उससे टिकें लगाएंगे और हमारी बहुत सारी चीज़ें resolve हो जाएंगी. This is how our balance sheet looks like. उसमें claims के लिए भी हमारे पास claims register होता है. IBNR के लिए हम क्या करते हैं, एक actuary को temporarily on board ले लेते हैं, उनको client की actuary की report भेज देते हैं and we set up a meeting. वो हमें एक report लिख के दे देता है कि everything is hunky-dory, the assumptions are valid, the market value is okay, they are reasonably stated, Allah la khair salah, everything is done. सही है ना? तो our audit is closed. We've never ever looked at insurance companies, I think the way that we're going to look at them now. We have, as I said, assumptions easily verifiable हैं, very simple assumptions that take place. जो थोड़ी सी complexity होती हैं वो हम actuary को पकड़ा कर, we're very very happy with it. And we make neat money out of it, so that, no problem. Now what will change and what are the challenges? This is the diagram that everyone has been talking about since morning, the building block model or approach. The contracts will be grouped by portfolio, current estimate assumptions, measured and reported based on entity-specific fulfillment of obligations, expected contract profit, and the list goes on and on and on. इस पे कहीं documents का कोई जिक्र नहीं है. कोई ऐसी चीज़ नहीं है जो documents से verifiable हो. Can we see it? No, I don't think so. मैंने बहुत सोचा इसके बारे में. I kept on thinking कि इसमें से मैं कौन सी चीज़ जो है वो verify कर सकती हूँ from a document, from a source document. Probably nothing. Fulfillment cash flows, I don't know anything about. CSM is a residual product. इसमें जो assumption की changes होंगी, that will be current market assumptions, जो कि every year change हो जाएंगी. Every year the release of CSM to the P&L will change. Your, excuse me, मेरी पूरी building हिल गई है. So, it is all assumptions. Portfolio कैसे बनेगा? How have they aggregated the portfolio? How have they determined what the onerous contracts are? मुझे तो कुछ समझ ही नहीं आया इस पे कि क्या देखूंगी मैं, क्या कर रही होंगी. So, these are the audit issues. The unit of account, the aggregation, जहाँ से पहला start होगा कि how will we convert this portfolio? कौन से contracts onerous होंगे? ऐसा तो नहीं है कि onerous contracts के साथ non-onerous contracts mix कर दिए गए in order to bring down the losses. How do you determine कि एक composition क्या है portfolio का? How will we challenge the management on that? Then fulfillment cash flows in CSM. ये इतने सारे building blocks हैं. उसमें से चले मैं taxes verify कर लूँगी. Directly attributable acquisition cost भी. But aren't they supposed to be spread over a period of time also? फिर क्या deaths, surrenders, premiums I know, premiums I can verify. But I can't verify the 4 building blocks that go there. Again, cash flows will represent the management's estimates. Based on prior experience, there is a product design that goes into it. एक ही product में किसी में 4% है premium का rate, किसी में 2.5% है, और मैंने कभी आज तक question नहीं किया कि भाई किसी में 4% क्यों है, किसी में 2.5% क्यों है. तो what will happen now? The CSM is adjusted every year. How will I challenge the estimates? Then we've been talking about unbundling of contracts. This is the one thing that probably nobody's talked about to that much detail, there are contracts which have embedded derivatives in them. Usko determine karna padega. You'll have to segregate the derivatives from the host contract, and then they will go under IFRS 9, and then there'll be distinct goods and services, and then there is an insurance service which only falls under IFRS 17. So uske different components kaise niklenge? Can you see my problem? These are all problems that I'm going to be facing and people like me are going to be facing when IFRS 17 actually comes into play. There'll be huge changes in the presentation and disclosure of the financial statements. Will have a pervasive impact. The IT architecture will change. मेरी grouping भी same नहीं रहेगी. Last year के working paper से trial balance ही match नहीं होगा, because now the trial balance will start looking different one fine morning. So what will happen? Now this, in my opinion, is a very, very busy slide, because it talks about a lot. It takes a lot of elements from Ali's presentation, a lot of elements from Abdul Moeed. This, वो मैं कोशिश करती रही इसको fit करने की, एक पेज में बड़ी मुश्किल से आया है. This is what is likely to affect audit with IFRS 17, when the new accounting policies will come into play. The IFRS 17 calculation methodology and guidances, the actuarial models, they will vary from company to company. No two companies have the same actuarial models. Then the general ledger charts of accounts is going to change. With the advent of IFRS 9, management may rethink their investment policies and come up with new products. The data will change, the reconciliations will change, the systems will change, the processes will change, organization itself will change. मुझे तो ऐसा लगता है कि 2020 में मैं जिस organization में बैठी होंगी, 2021 is going to be entirely different. But to me, it gives me an opportunity to think more holistically about audit, to now work with the people who actually design the product and not just stay on the outside rim and looking inside. I would actually be looking at auditors to play their role in the transition process. In the transition, it's not only the CEO and the board that have to be on board. The auditors also have to be on board. ऐसा नहीं हो कि पूरा साल गुजर जाए, when the auditors come in, they start raising challenges, and at that point in time, it may be difficult for the management to understand those changes and to, give the answers to the auditors. So I think we as auditors would also need to engage with all the stakeholders. We will need to talk to the IT people, get to know their source system changes, their integrations and enhancements. We'll need to talk to actuaries about their actuarial models. We'll need to talk to the accountants of the company to get the new mappings, and then talk to the financial controllers, etc., for the consolidation, disclosure, and presentation. And this should not happen post facto. We should be a part of the transition process. That's how I would look at it. This was the one sentence in one of the articles that was written, and that has resonated with me throughout. The actuaries need to speak accounting, and accountants need to understand actuarial. Gone is the time of working in silos. कि auditors आएंगे, उनका data अलग है, उनको अलग data दिया जाएगा. Actuaries अपनी सल्तनत अलग बिठा के बैठे हुए हैं, उससे product design करेंगे, और बस एक actuary से meeting कर लेंगे. That's about it. That is not going to work anymore. All of us would need to converse more. We'll need to have those conversations. Rethink the audit. Now, this, I think, is the sum of everything that I've thought of in the past 2 to 3 weeks. Now the audit team actually will have an actuarial expert engaged from the word go. He will not be sitting in his office with the actuary report that my client has given and doing a desktop evaluation. No, he will be there in the field, talking to the actuaries, talking to the chief actuarial officer, looking at those, the release of the CSM, looking at those building blocks, how were they designed, challenging the cash flows that the management thinks are going to arise out of those contracts. They would need to look into the portfolio aggregation, how the owner's contracts have been determined, why a certain contract is said to be never onerous, that it will always be profitable. What are the changes that have taken place in the portfolio during the year, the movements that have taken place? He's going to look at all that, and that cannot be done from a desktop. He will have to be there, engaged in the field with the auditors and the audit team. We would also need an IT and system auditor on board. Again, the IT people whom we engage come in, they work in their own suite environment, they look at application controls and change management, and they would look at password controls and data backup plan and disaster recovery. Those will be there, but now they would actually have to engage with the client to look at the mapping of the GL, to look at the pathways that have been established by the IT system people to break those building blocks down. What is affecting which account head? They would need to look at the data logics that have been there, look at the assumptions that have been fed into the system. Does the actuary agree with those assumptions? Are those assumptions the same that the actuary of the company had designed? And if there has been a change during the year, who has authorized that change? Where did that change come about? So then that would need to change. And we, as the financial auditors, the traditional auditors, as I call myself, would need to be a part of the transition. Probably have a mock audit somewhere in 2020 to see how the system is evolving, whether we will be able to meet that challenge in 2021, tweak the things that need to be tweaked for us to be there for the 2021 series. Then engage early with client. We need to go in very, very early. We would need to understand the due process of the portfolio aggregation. Again, we can't leave the actuarial people running amok. पता चला client का actuary भी बोल रहा है और वो दो actuaries अपनी अपनी जुबान में बात कर रहे हैं and we are both staring on. It's not going to work. We also need to understand how a portfolio is designed. Why is it designed in a particular way and how did the disaggregation take place? Then understand the flow of transactions and the data paths, because at the end of the day, it is a game of figures. It has to boil down everything that the actuary, the IT people, everything is boiling down is to the presentation of those figures in the financial statements. So we need to understand those. We need to challenge management assumptions to conclude on their reasonableness, review the movements within the portfolio to ensure that modification criteria, because nobody is talking about modification. Abhi to hum first implementation mein hi baithe mein. But there will be modifications, and there can be modifications during the period, during the implementation process also. It will be a trial run and there'll be a lot of hits and misses, but we need to talk about that. And then last but not the least, probably even engage our consulting experts for the embedded derivative valuations. Our valuation experts may need to come in to value those contracts. So to me, IFRS 17 goes way beyond financial reporting or business. It's going to bring a holistic change to the industry at large. That's how I view it. Everyone who is engaged in this industry will be affected in one way or the other. It is time that all of us woke up to the challenge and started working towards it as a team. That's about all that I have to say. I don't see many auditors. The only auditor I see is Farokh. So if Farokh has any questions about the audit, feel free to ask them.
We're in a difficult position. Anyways, first of all, many congratulations and giving us such a passionate presentation from an auditor standpoint. I also being auditor, I also being part of doing life companies and general companies auditor. Let me assure you that our work at least goes beyond just having a meeting. We do challenge, and the people who know, it goes beyond. Certainly it goes beyond that is the normal audit. As far as the matters that you have highlighted, those are going to be the challenges for 2020 audit. Certainly I agree with that. And in my opening remarks, I also made this comment that if we go and read the standard, it has some tilt towards actuarial sciences and actuarial input. So certainly as far as the audit